We've got a special discussion now lined up, and let's talk about what's really going on with the specialty chemicals segment. And we've got Vinati Saraf Putreja, Executive Director at Vinati Organics, and Managing Director Aarti Industries as well, to talk about and help us better understand the price trends, assess the impact of crude, to assess the demand, volume growth, all of it. Vinati, Mr. Saraf rather, if I could first come to you. You know, crude oil has seen quite a sharp swing. It's up 13% in the first quarter, down 10% in the last week, been quite volatile. Rupee too has seen a depreciation of about 5% in the last 3 months, nudging the 69 mark. Now, while crude oil and currency fluctuations do impact the chemical industry, what's been the case for specialty chemical companies such as yours?
Sure, crude, like you said, has been slightly volatile. First it rose and then it went down, and again we are seeing it picking up. It's a little above $70. At the industry level, obviously it affects purchasing power. It increases the raw material prices. But for specialty chemicals, such as ours, where there are very few manufacturers or players globally, we are able to pass on that price hike in our products as well, because we have contracts with our customers, formula-based pricing. As far as you raise a very important point about the exchange rate also, with dollar having appreciated. Now again, for a specialty chemical manufacturer like ours, we export about 70% of our revenue comes from dollars. So actually this has had a very positive impact on our top line, and generally net in the bottom, even though it affects our raw material prices also, because as dollar appreciates, all crude tends to become more expensive, and so do all raw materials, chemical based raw materials. But we are net dollar positive. So both, so dollar appreciation has a positive impact on our company, and crude being up, one of our biggest products is used in oil exploration. So when crude is at about $70, the demand for our product also goes up. So there's a multifaceted impact on our industries, so as to say.
Okay, fair enough. Do want to understand, however, on how you're looking at such periods of volatility. Does demand get impacted, you think, in the short term? To what extent do companies absorb cost pressures before having to reprice?
See, at our own end, both crude and exchange rate are volatile, and most of the contracts, even though they may be short-term contracts, but the relationships are of a long-term nature. So you don't really go and renegotiate contracts just based on short-term volatility. There's always a provision in most contracts of up to 5 to 10% up and down swings. You're expected to absorb such swings. Our contracts specifically, we have been able to renegotiate, but that's an altogether different matter, unrelated to crude and exchange rate at all.
In your case, a competitor, Lubrizol, exited the market in Q4, which is positive for one of your key products, ATBS. How much of that market will you be able to grab? What's the bump up in volumes and pricing of the products that you're laying out?
Right, I think you hit a very valid point. After Lubrizol having exited the ATBS market, now that is our single biggest revenue contributor as of today. About, I would say, 50% of our volumes come from ATBS, and especially after Lubrizol's exit, our volume numbers have increased. So Q1, you're looking at increased volumes on a year-on-year, Q-on-Q basis. We have been able to renegotiate our pricing also, because there's a shortage of the product worldwide. Given the effects of raw material, exchange rate, we are slightly expecting better margins also in Q1. Again, now if you go to our old product isobutyl benzene, there you will see Q1 sales have been slightly lukewarm, depressed demand. Also in Q4 the offtake was higher on IBB side, but we also had a big uptake.
On board, Vinity, just hang in there. I would get in Rashesh as well into the discussion at this point. And Rashesh, if I could help, your views over here. How do you think, besides the currency as well as the crude volatility, the industry dynamics are shaping up right now? What are your thoughts?
Yeah, I feel that specialty chemical industry, this is a golden period for it, and next 5 years to 10 years, we expect Indian industry to do very well. A couple of reasons for that is more and more multinationals and Western companies are looking at outsourcing contracts and buying opportunities out of India because of lack of availability in China, and due to the cost pressures also the Chinese prices of raw materials for them have increased, and this is prompting them to move towards India. So this is basically also the rupee also devaluation is also going to help Indian industry for exports. So these are the two key factors going forward for specialty chemicals that we feel it will do well.
So also help us understand, what really happens in periods of such high volatility. I mean, does the demand get impacted in the short term? How do the dynamics work there?
Yeah, the demand and supply, it is just a function of inventory which is carried at the customer end, and they try to adjust the inventory. More in agrochemical sectors, the inventory which is carried by the manufacturers or our customers is little larger. So there, if the prices go up a bit, then the demand slows down. But otherwise, in other sector, we don't face such issues.
But to what extent do companies like yourself have to absorb in any of these cost effects?
Basically, we absorb this cost effect, only for a quarter, and then probably most of our contracts are cost plus pricing. So for domestic market, it is 1 month, which is absorption of higher cost that we have to do, and for export contracts, it is mostly 3 to 4 months, and then the cost increase gets passed on to our customers.
Right.
In most of the cases.
Right, but do you sense that the demand right now that we are seeing is sustainable for the industry as a whole and across product categories, or is it very, very case specific when it comes to being able to make profits on each of the products that are being sold?
We overall feel the demand, there is good demand in current scenario, even though the crude oil prices have gone up, and we are able to maintain our margins on most of our products. We sell across industry, almost all the majors, industry, agrochemical, pharmaceuticals, polymer, and oil additives, everyone buys from us. So, we are able to pass on, and demand has not slowed down. One of the reason is the China availability has also reduced. So, that factor is also helping us in overall.
I was asking you, Mr. Gogri, would China be a threat, or do you think that that risk has scaled back a bit?
Yeah, that risk has scaled back a bit. We have heard that there are a lot of SHE related pressure in China, and newer permits for newer manufacturing setup are not being issued very easily. Basically, we have to classify the industry in whether you are in bulk chemical manufacturing or a specialty chemical. In bulk chemical manufacturing, the plants have, in China been able to mitigate the environmental and safety risk. But in the specialty chemical sector, they are not still, up to the Western European standards, which is expected by the Chinese government. So that's where we are seeing a lot of closures of chem parks because of the incidents, because of the pollution related issues, and I don't see situation improving very soon.
Vinidhi, just wanted to get your closing comments as well. You've got a high market share globally in about 3 products. As the market size for them is also increasing, you've also scaled up the capacity, the expansions there, and there's a shift of business from China as well. How is it that you see your market share reading, say, in a couple of years' time?
See, fortunately for us, the market size for our products is also increasing. IBB, which I mentioned, is used in ibuprofen, the painkiller, and the demand for ibuprofen is increasing globally at 5%, which means 10% for us, since we have around 60-70% market share, because people's tolerance towards pain is reducing. The usage of combination drugs involving ibuprofen is increasing. Similarly, for ATBS, which is our largest product today, it's used in oil and gas recovery, it's used in water treatment chemicals, personal care, acrylic fiber, dyes, all sorts of industries, and that is growing at 10 to 12%. So whereas our market share at ATBS stands at about 60-70%, the overall market is increasing. We are also expanding our capacity. So, you will see growth from our existing products, but also the future outlook for us, we expect revenue growth to come in from new products as well, which we are adding, which we will be starting in April next year.
What's the capex that you've drawn for the year and expansion plans, which would be coming on stream then, Vinti?
See, last year we increased our IBB capacity by 25%. This year we are already debottlenecking our ATBS capacity by 15%. Next year we will be starting isobutylene based derivatives, which is a completely new plant to make butyl phenols. That itself is about a 250 crore investment expected to come on stream by April. This year you can expect a total capex of about 200 crores in our books. Now year on year our revenue growth, we are expecting to cross 1000 crores this year on account of high ATBS as well as IBB demand. And going forward you can expect a CAGR of 20%.
All right, Mr. Gogri, would want to come in with your final thoughts as well. Right now it seems like specialty chemicals is the thing in the market. Do you believe that this sort of momentum will continue to translate into higher market share? Because there's competition also that's brewing.
We believe that putting up any chemical new industry in India is also not very easy, and it takes at least 2 to 3 years to put up any new facility and get all the permissions. So any new player to enter in the marketplace also will take some time to stabilize and build a model, integrated product mix. However, we ourselves at Aarti Industries, we have capex lined up for 1200 crores for next 2 years. We have signed 2 contracts for 4000 crore with one multinational on agrochemical side and 10,000 crore for 20 years with another specialty chemicals multinational. So we see long-term revenues coming from these contracts, and both these projects are coming on stream in FY20. And our current product portfolio also, we have done some expansion activities in chlorobenzene as well as specialty oil additive sector. So we see good revenue growth going forward, 10 to 15% growth in top line and 15 to 20% growth in bottom line is expected from us going forward.
Okay. Thanks very much, Vinti, as well as Mr. Gogri, for joining in with your perspective on how the specialty chemicals industry is likely to perform in the near term.